On today's episode, I'm going to take a closer look at 4 stocks that I have my eyes on this week for potential buys. Like many of you, I try to put money to work on a weekly basis, either adding to old positions or finding new positions. In today's episode, I want to take a closer look at 4 stocks that are already in my portfolio, and I just want to increase my overall position size because of the current market opportunity I believe they have right now. So let's get started. All right, so the first company we're going to take a closer look at is CrowdStrike, ticker CRWD. This is a huge cybersecurity company with a market cap of roughly $34 billion. We can see year to date the stock is up roughly 40%, but we can still see from its kind of 52-week high, the stock is still down roughly 30%. I'm not trying to price anchor or anything. One of my favorite things about CrowdStrike, in my opinion right now, it is not too crazy valuated for this kind of emerging market. I do believe the cybersecurity market is one that's going to continue to grow at very rapid pace, especially with the kind of AI market that we're moving right now. I do believe that's also going to increase the need for cybersecurity solutions. And we can see in annual recurring revenue in its most recent quarter, the company reported $2.7 billion of ARR. I wouldn't be surprised if by the end of this year, this is going to, I would be shocked if it's not over $3 billion. It might be even closer to 3.2 in my opinion by the end of the year, especially determining on how the market is shifting. But I believe somewhere between 3 to maybe 3.3 billion in annual recurring revenue by the end of this year. And that would give this company a kind of valuation of roughly 11x on annual recurring revenue, where I don't think it's too crazy, right? The company, it has plenty of cash and short-term investments. They pretty much have no debt to their name. So overall, the company financially is also in a healthy place. Overall, the company has recently introduced new AI solutions, especially Charlotte AI, a new generative AI security analyst that uses the world's highest fidelity security data and is continuously improved through a tight human feedback loop from usage by CrowdStrike's industry-leading threat hunters. And this is what's one very important thing about cybersecurity, about AI in general, is it really depends on the data. And CrowdStrike has been collecting numerous data, so I do believe they are going to continue to be a leader here in this AI space. So this is one of the main reasons I'm super excited about CrowdStrike. Normally, I have been purchasing a lot of semiconductor companies, but I do believe I'm shifting a little bit. Even though the next two are semiconductor companies, I do believe the cybersecurity market is one that, sure, might have seen a nice roundup, but I do believe it's still standing at some nice valuations. The second company I want to take a closer look at is Microchip Technology. Now we're here in my bread and butter, right? The semiconductor market. Microchip is actually fairly new in my portfolio, I believe maybe a month or 2 months old. So now right now I'm just trying to increase my position size. Current market cap of $44.7 billion, dividend yield of 1.8%. For those not familiar with Microchip, this is a company that creates FPGAs, microcontrollers, and these are pretty much used for a lot of different solutions, from aerospace, from automotive, from industrial, from robotics. And I personally believe these are the markets that are going to continue to grow. A great thing about Microchip, right, is if we take a closer look at the revenue by megatrend, their megatrends are the segments that they believe are going to grow at rapid levels. These are the ones growing at some crazy rates, right? We can see Internet of Things. We can see data center in here. About 2 years ago, data center was only 14% of this company's total revenue. Now it's 17.5. 5G, another transformative emerging market, used to be 2%, now it's 5%. AI, for example, they do have AI, but it used to be 1.2. Now it's roughly 3.8. Autonomous driving and kind of autonomous assistant driving systems used to be 2.4. Now it's 3.1. The EV market used to be 2.1. Now it's 3.2. So we can see how these megatrend markets are growing dramatically for this company, and they're becoming a bigger portion of the pie for the company's total revenue. So I'm super excited about Microchip. Like I mentioned, they're if you want to learn more about Microchip, I just did a deep dive on my membership program. Make sure to check that out. But if you just want to support the channel anyway, it's always appreciative. A thumbs up and subscribe helps so much. I'm trying to hit 30,000 by the end of the year. And finally,
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Another thing about Microchip, right? This is a company that I believe has strong growth potential, but it's also a company that we saw has a dividend yield. It's trading at a very nice valuation. If we take a closer look, Microchip right now, PE ratio of 20 at the moment. So obviously, if this company is expected to grow, it's gonna get even lower. And we can see this is a company that's generating strong cash generation and is using that strong cash flow to kind of pay back debt, to kind of return back to shareholders via dividend or repurchase buyback. So Microchip, one in my portfolio that's pretty new, trying to increase it. I think I'm gonna make it somewhere between 3 to 4% of my portfolio. I enjoy it that much. I don't think I'll make it over 4 though. At the moment, right? Maybe things can change. The third company we're going to take a closer look at is another semiconductor giant, and this is Qualcomm, market cap of $126 billion. Now, Qualcomm, in my opinion, is a company that's really focused on just the mobile space, right? That's definitely great. What I'm investing in Qualcomm, though, is the future potential. Qualcomm is a company that's growing in the autonomous driving market, is growing into the kind of Internet of Things market, and with all these things like robotics, industrial robotics, automation in robotics, automation in Internet of Things, AI into Internet of Things, and all these other products as well, I do believe Qualcomm can be a great, great winner. Obviously, their Snapdragon processor is great. I don't know if I see too much growth in the cell phone business, but the processor itself can go into other aspects. We can see Snapdragon is now being used in Windows systems as well. So we can see how the Snapdragon line is expanding into other opportunities. What I'm really excited about about Qualcomm is what they call on-device AI. So Qualcomm is one of the leaders here on being able to run AI workloads on device outside of the cloud. And I do believe this is where the market will be heading in the next few quarters. It's still early innings to see where it's at, but I do believe Qualcomm is a leader here. I actually just did a video on Qualcomm calling it maybe the next NVIDIA. Obviously, maybe that was a little bit more click-through or clickbaity, but I do explain why Qualcomm has the potential of really benefiting from the AI market, and I do believe it's this hybrid AI where there's going to be a mixture of on-device AI, which Qualcomm is a leader on, and cloud AI, which a lot of companies are already doing. So Qualcomm is number 3. This is one I'm really, really trying to actively increase in my portfolio because I do believe the opportunity is there. The risk here, though, is maybe hybrid AI is not really the case, and I might just be kind of seeing into something that might be dead waters, and that's the risk that comes here with Qualcomm. But I do believe I do believe this hybrid AI is the next thing in the AI market, or one of the next things. Maybe not exactly the next thing, but hybrid AI is definitely where the space is going to go, and Qualcomm can definitely lead the space here. Now, the fourth company is a fintech giant that I either see they're very loved or very hate, and that is PayPal, ticker PYPL. Market cap was $75 billion. I mean, PayPal, in my opinion, is a company that benefits dramatically with a strong consumer market. Unfortunately, that's not where we're at right now. So PayPal is definitely taking quite a hit. One of my favorite things about PayPal is the report that came out, or the newsletter that came out on June 20th, where PayPal and KKR announced an exclusive multi-year relation for European pay later receivables. This, again, KKR is buying PayPal later's loans. So this is going to do a few things. It's going to reduce the risk of PayPal and kind of help their balance sheet a little bit more. And PayPal said with this kind of reduce of risk in their balance sheet, they're going to use it to give it back to shareholders and for the company. They even increased their potential buyback this year by an extra $1 billion from $4 billion up to $5 billion. Some other things about PayPal is this is, again, many people call this a dead company, but if we take a closer look, total payment volume is up year over year. Sure, it's down quarter over quarter, but last quarter was the holiday season. If you don't see why they would be down quarter over quarter, then maybe the fintech space might not be for you. The other thing is this company continues to grow active accounts on a year over year basis. Again, same time last quarter was the holiday season, so things are a little bit different. We continue to see total transactions per active accounts continue to grow as well. Again, with that buy now, pay later sell of loans, this company is increasing. It's going to increase their balance sheet and de-risk a bit. And we can see this is a company that really does return to shareholders. In the trailing 12 months, did $4.1 billion to stockholders. And I do believe this year is going to be closer to that number, especially if they're going to do roughly 5 billion in share repurchase. And I wonder where else they're going to go. But 5 billion alone is going to make this a really nice year for return to shareholders. So these are the four stocks on my watch list for potential buys. I'm really, obviously, I only put X amount of money into the market, so I don't purchase all four, but these are the four I'm keeping an eye out. There's not going to be another one that I purchase. Let me know your thoughts on these four companies, or what are the four or few companies that you're keeping an eye out this week. I hope you guys enjoyed the episode. Take care, have a good day, and see you next time.